What's up guys, Mr. Financial here, and in today's video I'll share how much our $145,000 portfolio paid us in May. Let's do this! Before we look at our dividend income for the month, here's what our portfolio's dividend calendar looks like. January, April, July, and October are the big dividend months. February, this month, May, August, and November are only monthly payers. And March, June, September, and December are about half of what the big months are. In May, we received dividends from our 4 monthly payers: Canoe EIT Income Fund, Smartcentres Real Estate Investment Trust, Riocan Real Estate Investment Trust, and First National Financial. As usual, we'll go through each dividend we received, adding up our totals along the way, starting with the smallest payer in relation to our total dividend income, and not just the size of the dividend itself. Our smallest payer was Canoe EIT Income Fund. We continue to receive $23 each month. It provides us with 2.9% of our yearly dividend income. It has paid out a regular 10-cent distribution month in and month out for over 2 decades. No wonder this is a Canadian favorite for income. Before we look at our next dividend, help out this video by smashing that like button. We appreciate it so much. Next, we received a distribution from Smartcentres Real Estate Investment Trust. If only you could see me dance to that. Anyways, we received $60.35 in distributions. It provides us with 7.6% of our annual dividend income. Smartcentres is one of 2 stocks we own that doesn't have a dividend growth streak going. Their share price is under a lot of selling pressure. Their last distribution increase was in 2019, and with their payout ratio where it is at right now, I don't see an increase in the near future. With this paycheck, we are at $93.35. For our third paycheck, we received $66.98 in dividends from First National Financial. It provides us with 8.7% of our annual dividend income. First National Financial raised its dividend only 2.1% last year, but paid a 75-cent special dividend at the end of the year, bringing its yield to nearly 9%. And it has a reasonable payout ratio of only 66%. It'll be interesting to see what the real estate activity will be like, with the Bank of Canada's overnight rates forecasted to drop 3 times this year in Canada. This paycheck brings us to $150.33. Our last monthly payer is Riocan Real Estate Investment Trust. It paid us a distribution of $70.30, providing 8.9% of our yearly dividend income at nearly $850. Despite raising its dividend 3 years in a row, it still has a negative 5-year CAGR on its dividend because of the pandemic cut. Similar to Smartcentres, its share price is under immense selling pressure. They have a very stable portfolio of properties and a low 61% payout ratio. So after our 4 monthly dividend payers, our grand total is $220.63. This is one of the weak months. Compared to May of 2023, our dividend income grew 22%. I like to see at least 15% yearly growth. We're on track for a 20% growth in 2023 overall. Anyway, our 3 largest dividend payments accounted for $197.63, or 89% of our dividend income for the month of May. With only 4 payments and all monthly payers, this doesn't mean much. We are building our portfolio with a focus on the quality of the company and dividend growth potential. We aim for a Chowder score of at least 12 with our dividend growth stocks. However, we never want to be too dependent on any one stock in the event of a dividend cut during economic turmoil, so we don't hold a concentrated portfolio. Check out our portfolio breakdown. No one industry or stock dominates our dividend income. Our portfolio reveal video last week showed the breakdown of our portfolio by industry. If you want to check that out, just click up here in the top right corner. Now, an absolutely massive part of our dividend income growth is from the dividend raises we receive. So far, we've received 11 dividend increases at an average increase of 7.5%. Not too shabby, right? In the month of May, we broke the ducky from April and had 2 dividend raises. Pembina Pipeline increased its dividend 3.4% to 69 cents, giving it a 3-year growth streak. That added $17.20 to our annual dividend income. TELUS Corporation raised its dividend 3.5% to 38.91 cents, giving it a 21-year growth streak. That added $18.94 to our annual dividend income. Those 2 dividend increases added $36.14 to our annual dividend income, and that's like deploying $904 at a 4% yield. Gotta love everything organic, right? Organic coffee, organic fruit, organic dividend growth, baby. Some other notable dividend raises were Loblaws. It raised its dividend 15%, giving it a 12-year streak. Finning International raised its dividend 10%, giving it a 22-year streak. EQB raised its dividend 7.1%, giving it a 3-year streak. Hydro One raised its dividend 6%, giving it a 9-year streak. RBC, or Royal Bank of Canada, raised its dividend 2.9%, giving it a 13-year streak. We ended the month with a forward annual dividend income of $9,517 with a yield on cost of 7.88%. We are inching closer and closer to that 10,000 mark again. We still have $48,000 to deploy in our TFSA this year. As we get closer to maxing it out again, we expect our dividend income to snowball faster and faster until retirement. I can't wait. Thank you so much for watching another update. A la próxima. Until next time, guys.